Hey everyone, this is DayTraderRockStar, and this is the market radar for June 26th. I want to get on here and talk about the last 2 days of activity in the market and what the market is great at doing. The market is great at doing, I talked about this all day on the radio, the market is great at taking what the most popular consensus is and proving them wrong. The market here had great housing numbers yesterday, and we popped higher, and then we actually reversed. And in the process of a reversal, and we were talking about that, I said, watch for a reversal. This is the perfect scenario. When we look for a reversal, we look at taking out those highs, pushing those shorts to the limits, making them capitulate, making people chase the market and saying, wow, this market's going higher. Next thing you know, it's moving down. And we had some bad news come out yesterday, or we had potential news, it wasn't potential, it was news that kind of hit the market, some things coming out of Syria, and it really brought the volume in, and we brought us down quite good. We actually sold off most of the day. And this morning we had a kind of an overnight trade. It was non-existent when we had the GDP come out today, and again, just like we had positive housing numbers yesterday and the market reversed to the downside, we had a horrendous GDP, final GDP number come out. And that was, again, a big focus of the market. But what happened was the market rallied. The market rallied on this. And why did the market rally in such a bad number? Well, because we left off yesterday with that 60-minute time frame getting oversold. And that's the first thing we mentioned this morning. I said, be careful, that 60 minutes oversold. There's definitely an opportunity for a bounce here. And this is the theme of this video is understanding the market, how the market works. The market works in a strange way. It does tend to take the good news, and you want to sell into that good news, and you want to buy that bad news. And when you see some of the indicators, the momentum indicators, just play out exactly, even in spite of the bad news. The bad news, might be some commentary out there saying that the bad news it's just noise, it's whatever, it's just something that's a one-time event. So of course you would buy that, But I'm looking at more of what happens in a topping process. It's hard to call a top in the market, hard to call a bottom, but I do recognize when those things play out, there's a common denominator that happens. The common denominator is the market just doesn't go up and just goes down. When you top out, you usually break down and you bounce and you fail to make a new high, and then you continue, then you roll over. Same thing on the bottom side. If you break down, you bounce, and you go down and retest it. Sometimes you don't take out the lows, but you do pull back a little, and then you bounce back up and then continue. It's almost a retest and a failure. And that can be seen lots of times on the stochastics. And the stochastic indicator is a great one for that. And CVS was something that we were recently in, and as a short, and it gives you a good example of what I was looking for, because I identified this as a nice rising wedge pattern, a good risk-reward trade as we started breaking down here. And this was in the midst of a pullback at the time we sent out the alert. And when we got down to this level, we said, all right, be careful here. We're going to expect a bounce. Expect a bounce because we got oversold on the daily. And what happened? We started to get a bounce. And I said, pay attention here, because if this is a decent little rising wedge pattern, what's going to happen is you're going to fail the bounce. The bounce is going to roll over, and we're going to continue to move down. And that's exactly what happened. So this is what we have the potential of this happening in the markets, even though it's on the 60-minute time frame. Here we have the 60-minute breakdown. We have the bounce, and now what we're going to watch to see if this kind of rotates back down. There's a little downward trend line here on the stochastics, and we're going to put this line here representing the next move down on the stochastic. So if we actually get down up to this point a little and then start to roll over, this would break us down to this trend line, and then we have some levels to look underneath us. Now, this is a scenario I'll be watching for tomorrow. It's not guaranteed to play out. We haven't seen it play out, but if we do see it play out, this is if we start to see that crossover, and that's my first key, is to see this stochastic crossover on the hourly. Starts to cross over, we have probably an hourly candle down to the downside, and something's going to come out and kind of shake this up, and we're going to get that rollover. The other scenario, of course, is we push back up to 1960. The future's 1960. And we continue to make new highs, and the short squeeze is on, because there's so much focus in this market of a pullback. People are waiting for that pullback, and that is a recipe for disaster for people shorting. So we got to be careful on trying to top out this market, trying to predict it, but we have to pay attention to the signals, and the potential is there. The things are lining up for that to happen. And I'm thinking of an analogy on the spot, but I'm going to pass on the analogies right now and just talk about, we are set up to fail here, and if we do fail, that would be our pullback range, and we can actually start to say, well, you have a pivot area down here. Depending on if this does fail, we push up a little, we start to see a new pivot play out there. What I want to do is actually create a parallel line, put it down to this thing, and then kind of manage this new channel that's going to break down. And we do have some trend lines underneath us. We have a nice little trend line underneath us here, which kind of represents almost a rising wedge pattern. And that brings us down to, that 1920 to 1930 level, depending on where this line here comes in. And then, of course, if we broke down through there, we have a big number down here and underneath the 1900. And there's some gaps down there, too. We have a gap back here, 1844. We have gaps throughout this market on the index, the major indexes. So I do expect those gaps to eventually be get closed. But the timing, as they say, so you're familiar with it, timing uncertain on that. So this is something I'll be watching tomorrow. We'll watch for that rotation back down. FSL, let's see, we have DNKN. Just going to talk about a few stocks right now. Dunkin' Donuts here, what a fantastic rip here. Best bet of the last couple of days, and this had a follow through. We took profits today on it. My overall goal was to get it up to 46. We closed out at 45.80. You look at the overall pattern here on Dunkin' Donuts. You could easily see this one trading back up into 48. There's a larger pattern that's playing out, a definite 1, 2, 3 pattern. Whenever I see that bounce, I always expect a retest of that bounce. And then, you get a retest, you get a bounce, it comes back down, you put a nice candle on it, boom. A crossover. Everything looks very strong here on Dunkin' Donuts, even though we did take a nice profit off of it. It still looks quite good. And now there's a lot of good setups setting up in the market. I posted a few of these in the room. I put them on the Trade Alert box, so don't forget to look at the Trade Alert box. These are nice flags that are setting up. We'll go over a couple of them. Verizon here looks, key for a boring stock. I'll give you that, a very boring stock, but I do expect to see this push up here above $50. And there's some new ones here. The Valero with the news out on the oil refiners. That looks great. And I'd like to get some follow-through on that. And the Deutsche Bank, we have a new entry on that. This is the second time we've taken it in 2 weeks. The last time we took this was, right back here. We got a 2-day pop on it. We sold it. Next day, it gapped down. I was like, all right, golden. So we got in again. I want to see the same thing. I want to see another pop on this. We're going to take profits again, and then we'll just continue to do that. And the FSLR. Even in the face of this, in this market and the potential, this flag, we've been trading this FSLR, and we got back into it. Again, the underlying trend line, the trending stochastic is a very powerful timing indicator. Sometimes you don't know how far the stock's going to go back, but once you have that underlying trending, the trend line coming under the stochastic, you can easily push right back up and use this as a timing indicator. So this is important. I like this a lot. And I still banging the table on Sony. Sony expect to get up to $18. I wouldn't be surprised to get a gap up above 17, open up around 17.20, 30 tomorrow. Just a hunch. It's been showing good strength. Gold and silver on fire. GLD, SLV continue to look pretty good. And I think that's it. We're going to do a fast little video. So I want to touch base on what I'm looking for tomorrow. We're going to be here again, as we are every single day. And there's a lot of other stocks out there. And again, if you go to the Trade Alert box, you'll see the new positions that we got into today. So those are really important. Some really nice ones. Again, what else? What else? Do I have anything else here just to follow off? Because I got to get out of Dodge and get some things done here. There is some shorts that we're holding, and again, the market's not kind to shorts right now, but some of these shorts are actually working out, and and we got to give them a little time, as long as we're not overly exposed, so to speak, because these could push a little bit higher. Wouldn't be, the same situation where we have that breakdown to a trend line. And again, I want to show you that, which we Dunkin' Donuts DNK had bounced here, came back and then retested the trend line. So and then we ripped higher. So that happens a lot. And on the Budweiser BUD, we pushed up to the trend line here. What if we pull back and retest again? Then we'll probably end up rolling over. So it's difficult to get the timing right on these. Sometimes you'll get a breakdown, a retest of that trend line, and then a rollover. So you don't want to be, when you're trying to establish a position here, you want to kind of scale in here, make sure you don't get that fake out flush higher, and if you do, manage it, and if you start to see it break down, then you can add to it. But don't get into full, don't go, bet the whole load on your first entry, especially in this market, and especially on a short. The Etna also, again, pushing up, and pushing back to the highs of the session, closing at the highs of the session. So the shorts have not been a go-to thing. But you know what? The CVS short worked out great. The Dr. Pepper Snapple seems to be working out great. So we do have some good setups here. And if the market decides to pull back, we're going to be on top of it. Because we have the setups that we want to look at, and we could easily add to those shorts. Sony looking good. Some other ones looking good. I'll have more stocks for you in the morning. Definitely tune in tomorrow. If you're not a member of Day Trading Radio, definitely check it out. We got great things going on, and most of all, profits going on. So I'll talk to everyone tomorrow morning, 8 o'clock. I'll see you on the show. All right.